Hello and welcome once more to a Map Room Briefing, where today we're talking about what I think is a really interesting subject, which is wealth creation. But we're going to talk specifically about options in that and how maybe you can consider or use a pension to help you build your wealth over time as an agency owner. The reason we're doing this today is to put some context behind it is now's the time of year where we have lots of what we call year-end conversations with clients, and they tend to be around how has the year gone, have you achieved your plan, did you overachieve it, and it tends to come around to a conversation around dividends. And very often when people are looking to take dividends out, it's can I write a larger check for myself, which is one of the benefits of small business ownership. The potential downside of that, however, is writing that check is also pre-writing potentially a larger tax bill. And so one of the things that we like to talk to people about is if there is surplus income, if you have had a good year. Also, we can say if you've not had a great year, do you need to think about this in the future? Is how do you put some of that cash into potentially a pension scheme, not just for the tax benefits, but also, building and, as I say, extracting value whilst you own the business, rather than put your eggs in one basket. So to do that, our subject matter expert today is Adam Downs from Pura, Vida, financial planners. Good morning, Adam. How are you?
Very good. How are you, Stuart?
Excellent. I suppose at this point, when I say financial planner, maybe that's the first question. I always introduce Adam as my financial advisor, and he often has a little scowl at me because I'm old-fashioned and use these phrases. But explain for everybody who may not know, Adam, the difference between an advisor and a planner, please.
First of all, Stuart, I don't mind you describing me as a financial advisor. That's absolutely fine. Why we describe ourselves as financial planners is because we do more than the traditional financial advisor. So in the marketplace, you can go to a bank. Everyone says they're a financial advisor, financial planner nowadays. It's a word to describe the evolution of the financial advice profession, really. So the history of financial advice, without boring everyone too much, was basically product salespeople. And as the profession evolved, it turned into independent financial advice, where you get good advice on products and the products you need. So the next step in the evolution of financial advice is financial planning. So it's thinking about people's plans, the things that are important to them, and giving advice around them as individuals, rather than focusing on product. Everybody needs a pension, everyone needs this. It's not like that. It's saying, well, what do you want from your life? So there's three key areas: life planning, financial advice. And as financial planners, we start with a person's life, how they want to live, build a financial plan around it, and then lastly, give that independent advice to achieve the financial plan, to achieve the life goals. So that's a little bit different from perhaps what most people think a financial advisor does. I'm not just here just to talk about pensions,
Yeah.
even though that might be the core subject today.
Well, the real reason, Adam, I wanted to get you on this conversation is, as I said before, maybe people putting all their eggs in one basket. We have two sides to our propositioning map. One is, are you planning a capital event? Is that where you want your business to take you? Because if you are, there's certain routes that are advisable to take. There's no guarantee of success, as we know, but there are routes you can take and there are systems to put into place. And the other side is whether you're looking to take a lifestyle business. And when we mean a lifestyle business, we don't mean maybe a business that, you're dipping in your toe in and out of. We're talking about a business where you are extracting value over the life of the business, and may have a business that has a limited time on it. You might not even get to an exit. In fact, I was looking recently, we always say most deals don't happen. And specifically in this space, it's less than 10% of agency owners who successfully get an exit. So I think it's important to think about that. And if you're going to have your business for 8-10 years or more, then why would you not use it to, build that wealth creation in the background? So that's specifically why I wanted this conversation. Because it's something that when we get around to budget conversations, which is again for clients this time of year, we are strongly advising clients to look at pension contributions. How can you start to build that wealth. Yes, if you can sell a business in 10 years' time, amazing. In fact, probably the best explanation of this is in fact, they're an old MAP client, were an agency based in Manchester. There were two owners, and they had two very, very different plans. One was absolutely capital focused. I am going to build this business in a specific proposition in quite a niche little piece of the market, and in 10 years' time, I'm going to be able to sell it. And his partner basically said, well, actually, my definition of success is I'm going to max my pension out, or I'm going to put as much into the pension as I can afford for 10 years. That's my wealth creation. If we sell the business for £1 in 10 years' time, it's £1 more than I planned. So that's the two extremes of what, when we talk about capital focused or lifestyle focused. So I think that's the bit that I really wanted to talk about. To try and maybe make that easier to understand, you often talk, Adam, about the difference between what we call, or what you call, tactical thinking and tactical planning, strategic planning when it comes to, let's just say, wealth creation. Let's just use this phrase for simplicity. So can you talk everyone through that, please?
So the issue with tactical planning is it's often standalone single events. So that's how we think about it. One thing, we're talking about tax year end planning. Let's save some tax this year. Let's make a pension contribution this year. When we're thinking about strategic events and strategic planning, it's about zooming out and saying, well, what are we going to do over the next 5, 10, 15 years? So you can build a wider strategy to then deploy different tactics at different points in time. So coming back to this potentially once in a lifetime event for some people in terms of exiting a business that may or may not happen, that's one part of a plan. And that's the issue with it, is that it's only one part of a plan and you might be looking at that as standalone. So what I would consider thinking about that as a subject is how that fits into your wider plan, and creating that plan as soon as possible is what I would say, rather than just waiting.
Interesting. It's, again, it's fascinating for me, whether it's MAP clients or sometimes with the non-exec stuff I do. It's very often about somebody who says, you've done this before, you've built and sold a couple of agencies, we'd like your input onto how you can help us as shareholders get, sell our business. And when I always say to them, okay, so let's start with why. Let's start with the why you exist today. Let's start with why you want to sell. And I'll often say to them, unless they've got a number in mind, you can't put a plan around it. So what does that number look like? And I'll be brutally honest, that number is often too low. I'll then say to them, what are you going to spend it on? And very often it's just the concept of exit, the concept of wealth, rather than the reality. And I was working with somebody recently that I've spoken about before, where I actually said to him, look, I think your business is worth more than you're suggesting or you're seeking. I think you need to go away and speak to a financial planner and get a real life plan put together and have a more structured number. That number came back, Adam, nearly twice what the gentleman was planning for. He ultimately sold for much more than that anyway. But it is that bit about, I think sometimes people are just, we have this entrepreneurial journey of, I'm building something to an exit, and you've got to sit there and say, what for? The other side of it, which I think I'd be really interested in your views on, you're saying there about you can't plan on a single event. I've also sadly known many business owners who've sold the business tactically. The famous, someone made me an offer I couldn't refuse, for it not to be enough and for it not to give them all the things they want. And when I say very quickly, I'm talking about in terms of life, 4 or 5 years after selling that business, they regret doing it. So I think that's an interesting part about, it's not just what if you get a windfall, a big year, or how do you build your budget alongside your financial plan? How do you build yourself that? I suppose I'm going to use the word comfort blanket. I don't know if you'd agree with that type of phrase, but how do you build yourself that buffer that says, all my eggs aren't in one basket, and anything that comes out of this process is top up. And also, again, I say this to people, and I am now of an age where as you know, I can get to my pension. And these days, thankfully, with stakeholder pension schemes, it's a lot better. But I know a lot of people, I'm going to say that's probably maybe 10 years younger than me, that just haven't looked at this, and when it wasn't in there, and suddenly now selling their business is about giving themselves a pension pot, rather than realising they could have built a pension pot over the same amount of time, 10 to 15 years, and then have a top up at the end of it. Thoughts on?
Yeah, I've got lots to unpick there, Stuart. The thing that screams out to me is that selling your business won't make you happy, right? So, and I run a business, right? I'm trying to grow and scale a successful business, and I absolutely love it. And the business owners I work with, they absolutely love it too. That's why I enjoy working with business owners. Business owners are typically the most difficult clients to work with, but I love working with them. The challenges, the hard things they do, but the deep purpose we have as business owners is so important. So that's the thing that I challenge the people listening to, is trying to understand the thing that's really important to you. So when we're talking about financial planning, life planning, it can sound a bit cheesy in terms of life planning. What do you want to do with your goals? What does that look like? When you really think about it, what's the thing that's really important to you? And some of these things will be family. Often it's like, I want to do things for my kids. I want to maybe do something for a spouse. It's about creating the best life for those people. But often with business owners, their business is a deeper purpose. A lot of agency owners are quite creative people. It's that pursuit of creativity and doing that creative work is the most fulfilling thing. So whilst a exit may provide a monetary value that can provide complete financial security to you and your family, and you can do everything you want to do for the rest of your life, one, it may not happen, but two, it isn't the thing that's going to make you happy. So for people that are going on the journey, they're thinking about their financial security in the future, this is why the capital event is so important, because it's that milestone potentially that says it's the one event that takes me from here financially to here financially. And from that point, hopefully I never need to work again. The challenge with that is, are you then creating a business and you're working in a business that's not making you happy in the meantime?
Yeah.
So if we're thinking about those stats of under 10% of people successfully exit, is there a better way to do this? Is there a better way to run your business that aligns with your own happiness? And that's how I think about financial planning, is we're utilizing wealth, one, for financial security. Yes, there's the things around pension, and I'll come on to that, why that's important for financial security, but it's there to be spent on things. It's there to be enjoyed. So it's pretty counterintuitive is to create a business, if it's not the type of business you want to do, that makes you unhappy. It's more stressful, more risk often if you're trying to scale quickly, trying to drive that profitability to then create that happiness later, which may or may not happen. I think a really good starting point when thinking about exit strategies and planning your business is saying, what do you want from your life? What do you want for the next few years? Often the people that I'll have conversation with will have kids of a certain age, maybe between 5 and 15. That time they're not going to be able to get back in 5-10 years, when they may or may not have an exit. So what does that experience look like? Actually, it might be traveling more. What do I want to do in 5 years? Well, I want to travel as well. 15 years, I want to buy this house in the south of France. And that's where that financial planning aspect comes in, to say, here's the milestones, here's what I want to spend now and in the future. And that comes a strategic personal plan for what you need. If you then continue that forward, you can actually then look at the business value and saying, okay, I need a business value of this to make this happen. So for the rest of my days, I have enough income, so I can put that money away, whether it be savings, ISAs, pensions, those vehicles, so that I never need to worry about money again. But also maybe in the meantime, up to that capital event, you should be thinking about your cash flow, your profitability, and saying that terminology of a lifestyle business I find quite funny, because I wouldn't say anybody I know has really nailed that lifestyle model. That dream was sold on the internet of kind of passive income. We'll put a management team in place and it'll just run seamlessly. It's not the reality of what I see. Often people with a lifestyle business are still working hard, but what they might not be doing is trying to scale it quickly, reinvest in profits, and instead having a higher profit business, higher profitability. And what they can do is they can have access to income now, which will be
Absolutely.
in excess of their expenditure. One, maybe to live a better lifestyle, but also to build financial security before that event. And that's the challenge. So one of the things you said about all your eggs in one basket is, a typical business owner will come to me with a property, a large mortgage, often very little in savings, very little investments, very little in pensions, and have a very successful business. For me, that is all your eggs in one basket. It's on your business. So I'll speak to business owners about their business and I don't know where any of us believe this, but it's the highest risk asset we'll ever own.
Yeah,
Just
I totally agree.
unless you're some kind of crazy crypto investments that something else. But
Yeah.
in terms of the concentration of wealth in a single asset, it's our business. And hopefully we get the reward for that. But what I'd be an advocate for is having a life plan that people are living now and in the future, and having a business that serves that now and in the future. So by all means, have a plan to scale, to exit, if that's the type of business you want to create. But I'd encourage you as much as possible to enjoy the journey as well.
I think that's really wise words. You know, as I say, having gone through that myself, and I've spoken about this, and I've asked other people to speak about it, because I don't think there's enough honesty when exit is concerned. That I ticked all the boxes that I thought I needed, and then realised it was not what I really needed, because I'd just worked to that point without all those considerations. And maybe that's why I'm biased now, Adam, about this kind of approach, because I think it really matters. One thing that was just going through my mind then, it wasn't Guinness, by the way, but one thing that was going through my mind whilst I was listening to you then was have you seen a change in owners' attitude when stakeholder pensions and auto enrollment came in? So I had an agency, or I invested in. I was an owner in an existing agency in Manchester when we had to do this. So obviously now everybody's got it. But there's a time from, where are we? Sort of 2015 onwards, when it was coming down. I'd done it in a much bigger PLC business before, but when it comes to the smaller business, people are starting to put in. And I can remember at that point having that conversation with my shareholder to say, well, you know, you're doing this now, and you're using some of what is essentially your money. I know technically it's never the owner's money, and we have to say it to everybody, but you know, the money that you could use for yourself, the business is now sensibly providing this additional income for others through the scheme. And so many owners at that point were excluding themselves from it. It was as if, this is a task I've got to do, to provide pensions for my team, rather than grasp the nettle and say, hang on a minute, this is a chance for me to do this. Have you seen any difference? And you might say, well, actually, I got into this after this was already there, but either anecdotally, is there any conversations around changes in mindset, or are still too many owners saying it's something I've got to do for my staff and not for myself?
Thanks, Stuart. I'm not that young. I'm not that young. Yeah. What I see a lot of is owners work incredibly hard. Incredibly hard. Ones I work with anyway. I don't think there'll be many differing opinions there. And I do see business owners saying, but my team's earning this. They've got these benefits. Sometimes I'll have team members earning more than they're extracting from the business. And the business owners are taking all the risk, all the sleepless nights. I'm not saying it's easy being an employed role. It can be really challenging, a really challenging role. But ultimately, the business owner, in my experience, is the person that's working the hardest, the most stressed. And what I think is really important is that business owners get the reward from that hard work. And I think we're talking a lot about capital events today, and that's seen as that kind of golden pot of money at the end. So that's my reward for 15, 20, 25 years of work. And I challenge business owners on this, and it's not an easy thing to do, but what you should be considering is putting money away for your own financial future on an annual basis, every single year, whatever amount that is, because this has a big impact over time. So it's not just the saving and effectively saving, but the tax relief is very significant on the corporation tax savings, the dividend tax you'd be paying. But it's also the compound growth of those investments. So if you look at the stock market over the last 10 years, I looked at this earlier, I think it's over the last 5 years, the stock market's gone up 64%. Over 10 years, it's 130% returns. That isn't some flashy investment. That isn't some scheme where we're taking unnecessary. That's investing in 13,000 different companies and just buying and holding. And over time, it builds and it builds and it builds. And that's one of the biggest flaws in terms of having that single event at what might be financial independence, is that you're not getting any return of your money before you then start taking money out of it. So I think that's really important to do, and it's hard. And it's hard because there's the pressure in the business of. It's the same for me. Before I started the business, I was sacrificing a lot of my salary. I was earning a good income in an employed role, and I started this business, and I didn't contribute to my pension for 2 years. It wasn't the right thing to do. Talking about tactics and wider strategy, it wasn't the right thing to do. And often it might not be the right thing to do, but often business owners delay.
Yes.
I'll wait for this, I'll wait for this, I'll wait for this. And it's that underlying risk that business owners have. It's like, but what if this? What if that? But the challenge for me is if it will just wait for that what if, and that money is there in the bank and it gets swallowed up because it's a bad business year, that's your asset wiped out as a value. Your business may go bust. Your pension won't. So you can't contribute to your pension if the business is at risk. But if you're contributing to your pension over years,
yeah, it's safe.
Yeah, your worst case scenario in that, if you've got limited liability to the company, is the company goes bust, which would be
Yeah.
don't want to play that down. But what you do have is some financial security yourself, and that's the thing that we're talking about: de-risking and having all your eggs in one basket. It's not just because pensions are great from tax efficiency. It's transferring wealth from an asset that you might own that might be worth something or might be worth zero in the future to assets you can rely on. So people feel comfortable with property. People feel comfortable with cash because they understand it, they get it, they can touch it. But this is where investments and personal wealth is so important. So it's about building up that wealth in your name year on year on year. In the good years, might be a little bit more. In the leaner years, might be a little bit less. But that consistent habit will make such a difference to business owners. To that point where you're getting towards an exit, and that number we're talking about that you need, it takes the pressure off a lot. And it might take off the pressure, the business that you need to build as well, because you're saying my number's X because I have nothing or little in savings and investments.
Yeah.
Actually, I only need this from the business. So what does a great next 3-5 years look like? I need to hit 10% a year on growth to become financially independent, opposed to 20%, 30% year on year to then look attractive to an investor. It's not easy, but there's an easy way and there's a harder way, I think. And I think having no assets and having all your eggs in one basket is the hard way, in my opinion.
I mean, I would hope. I've believed that for a long time. I've always used a phrase which is you want as many tickets in the raffle as you could. And in fact, I heard it well explained, or better explained than I did, at an event not that long ago. Actually, we're talking about this kind of subject, and there was a bit good. Wasn't an agency, but a good. It's still in the services business. Guy has a great business, and of course, his view was always, but there's always something I can spend that money on in my business. In the pursuit of growth, in the pursuit of excellence, there is, I can get that better quality person, etc., etc. And actually, this person who was even older than me sat there and said, "Would you buy a lottery ticket every?" He said, "Do you do the lottery?" He said, "Yeah, everybody does." But he said, "Would you buy a lottery ticket if it wasn't drawn every week? If it was drawn in 10 years' time, would you bother?" He said, "No, what would I do that for?" He said, "Well, that's exactly what you're doing today. What you're saying is, I'm not putting this money to use for me yet. You believe you are, but you're banking it all on something that might happen in 10 years' time." And the reason we were talking about this was, it was talking about the pressures of COVID and how so many business owners had questioned what they were doing it for, because the plan they were on suddenly hadn't done it. And your point there resonated with me, which is you could have built a great business and then all those reserves disappear. And of course, the accountants in the room are always going to say, and I'm terrible for sitting there saying 3 times overhead on your, on your balance sheet and all the rest of it. But you do have to sit there and go, well, hang on a minute, how do you de-risk yourself? Every owner will tell you why they're a limited company, won't they, Adam? They'll explain what the benefits of that is, but then they might not use that to say, to de-risk and put their money somewhere else, really. I also find it fascinating that people do get obsessed with retaining cash in a business. If I've got a cash balance, my business is worth so much more money. Simply not true. You might get valuation plus your cash back, but you've sat that cash as, I'm going to be brutal, earned no interest, hasn't grown, and you might have built up a large balance, but it gets transferred to you at that value. There's no premium for sitting on a cash balance, and that's the other thing that I try and say to people. I suppose that brings me on to, we are passionate at MAP about saying to people, how do you get the business to give you the life that you want? And obviously, we can help them with that business planning side, but then you've got to have someone like yourself to be able to give them the financial planning alongside it. Can you talk to an example of where you think these things mix? So where does business planning become financial planning? Where does financial planning become business planning? Where do the two best sit?
Yeah, they're completely intertwined generally. So what I may be biased on this as a financial planner, but it's the lifetime first, because your business is ultimately an asset that you own. So it's one of many assets that you might own, but it's there to deliver your life plan, your financial goals. So the starting point for financial planning, for business planning for me, is understanding what you want from your life. So how do you want to live now and in the future? And it's not that you need to have it all worked out, but I challenge people listening to write some things down. What does an amazing next year look like? So if you look at 2026 and say, I want to live an amazing life in 2026, what's that look like? And it might just be a few tweaks from what you're doing already. It might be taking a few weeks off. In addition, might be traveling to that place, having certain experiences, spending more time with partners, more time with children, those things. I'd then say zoom out 5 years, same thing. Is there any major things we want to change in the next 5 years? We would like to move house. Is there anything happening with our family? Any children off to university, any school fees, things like that? And then longer term, 10 years plus, it's really difficult because it's like, where are we in 10 years? Where was I 10 years ago? Very different place in life. But then saying, what's that life look like? What does ideal look like? A lot of business owners are probably thinking about, if they are thinking about exit in the next 10 years, it's hard to think past it, I think. But what are you going to be doing? What are you doing differently? Much of the same, maybe, but just maybe having a little bit more time. So if you think about that in terms of your personal goals, how you want to live, then it's then saying, what's stopping me doing that? So what's stopping you
Yeah.
next year doing some of those things? Almost certainly is probably time more than finances, I'd say, the next year. Those things that you want to do often aren't about spending a lot more money.
No.
That's a business. That's a business issue and comes into the plan. So what can we do in the business to create more structure for next year so I can have that extra holiday? Is it that extra? Is it an extra person? If we zoom out long,
Sorry, cutting across you there. One thing I want to, I'm a massive believer of this. I say to everybody, acid test your business by taking a month off. And people look at me as if I'm some kind of lunatic and they panic. Two things is, if you can't do that, particularly in this space, the majority of deals that get done, there's an earn out for the owner. And we've spoken on the podcast before with people who've said, look, the earn out didn't work for me or whatever. But I'm also a big believer in that thing that says, first of all, can you build the business? Because if you just said there, look, I'm going to do this, I'm going to go without let's just use the basic, I'm going to go without a holiday for the next 5 years because I'm building this thing up. You never get that time back. And also, are you really building a business that you could sell? There's lots of people who've written books about, is your business sellable? But that one for me, Adam, about not only, everything you've said about enjoy the journey and all that, I'm a big advocate of, but it makes sense as well. If you don't have the time to spend time in your life and outside your business, because I always say there's no such thing as a work-life balance, it just is your life, and how do you make it work, then are you truly ever got a business that's sellable? And I think that really matters. So taking that time out is a massive investment in your future, but too many people don't recognize it right now.
I think it's a really good point, because the irony of this is if you can't take a month off, you neither have a lifestyle business or business that's ready to be sold, because you can't have that lifestyle that you might want, perhaps, if time is a factor in lifestyle. But also, for a valuable business, you need to have a management team in place that can run the business when you're not there. So it's a good challenge, and I talk a good game, and it's a good challenge for me thinking about our business where we're in our journey. We're 4 years in now, we're entering our 5th year. I'd really struggled to take a month off. And that's important to acknowledge. So whilst I'm preaching and talking a good game, we're on a journey as a business. I'm on a journey as a business owner. Do I think I'll be able to create a business that will allow me to do that? I hope so. Pretty confident of that. And this is where it all goes back to stages in your business and what's right for you. So I don't want people leaving this conversation and thinking and feel beaten up as like in the second year of business, I should be making pension contributions. I wasn't. Second year of the business wasn't taking a month off. Absolutely not. But it's about that deliberate intention. It goes back to what we're talking about earlier about kind of tactical decisions opposed to strategic ones. Is we're thinking about the things that are important to us, how we want to live. That's then where the business fits into it. Is the business enabling that, or is the business holding us back? And often we put so much energy and effort into building our businesses, and then it's like these goals, then the next ones, and the next ones, and the next ones. And time passes us by, I think. And
Absolutely.
it's that thing of what I said earlier, selling your business isn't going to make you happy. It's not going to make me happy, but I'm going to enjoy the journey of creating an amazing business that hopefully at some point I can take that month off. So feel free to hold me accountable on that one as well, Stuart. But I think
I think, as you say, it's massive. And you look at, wasn't that long ago, we were enjoying celebrating 10 years of MAP. If you ask Paul the same question, when you're building that business, understandably, you have to, and this is the dilemma, isn't it? And sometimes, and I'm not saying this is for self-promotion, sometimes that's why external help supports you and supports your business better. When you're building that business and where you are today, your head down, and your business plan, in my opinion, is this year. This year, is it taking me? And it's hard to look at 3 years, 5 years, 10 years plus. But before you know it, you have got a business. Before you've blinked, you got a 5-year-old business. The next 5 years will probably go even quicker than the last 5 years. And there's MAP today, over 10 years old, and you go, well, I didn't think of these things, because you don't. As you're building it, I think you're thinking of, again, the gentleman that mentioned about the lottery, bizarrely, had spent, it was actually Canada, but it was still baseball. And he said, well, that's why he said there are players who play to get to the next base. He said there are players who always focus on the home run. And then you look at, whichever way you look at it, people remember the home runs, but you also need the people who get round the bases to get round. So it's a mixture of both those things, really. I'm conscious of time because we try and keep these things now down to about 30 minutes. I've gone slightly over. I was going to say, but I think we've covered most of it. Always, one of the questions is, what advice would you give somebody who's looking at X, whatever we're discussing? Just recently, it was raising finance, so looking at pensions today. But I think probably we've covered a lot of that. I think the easiest thing would be to say, if this has resonated with somebody, and if they're looking at this, and maybe even ask themselves those questions, to say, yeah, it's okay, Stuart, you're a lot older, you've been through that journey, you're telling me to do this, this, and this, but I can't do that right now. And there's you standing there, Adam, being open and honest, saying, look, I'm 4 years into my journey, I'm not at that point yet, but I'm thinking about it. How does somebody reach out to you? How does somebody have a conversation with you, either as Adam, the business owner, or as Adam, the financial planner? How do they find you?
Well, I think there's two things here as a kind of action point I think is useful. So if someone wants to speak to me, great, obviously. You can either find me online on our website, puravidafp.com. I'm on LinkedIn. Just search for Adam Downs, probably connect to quite a lot of mutual people. Or speak to the finance partner at MAP and ask for an introduction. If it's not quite right, the stage that you're in, you don't think it's worth a conversation, what I say is I'm always happy to help, jump on a call for 30 minutes. If you just don't want to speak to me, that's fine. What I'd challenge you to do is to set some personal goals, have a conversations with any loved ones that you have, think about your life, and then I'd lay down the challenge to your team at MAP and say, these are the things that I'm working towards in my life. This is what I want to do. How can we get the business in the place to do that? So I hope the MAP team will be able to help you in terms of, if you can create a clear plan for yourself, what I need either as an exit value or as an income, the team at MAP should be able to help you do that, or at least look at the numbers, see where you're at and see where you need to get to do that. And then I think that's a really useful step forward in terms of aligning the things that are important to you, your goals, and also your business and how the business fits into that.
Excellent. Well, at that point, I think all that remains is for me, obviously, to say thank you again, Adam, for your time. I was sitting here thinking, so Adam joined us when we first started this podcast. Adam was actually episode number 2. So here's your mastermind question. When do you think that was?
Me? Yeah. 3 years ago.
2.5, September 22. Now, again, that just is a blink of an eye. So if that doesn't make everybody think about Yes, but at some point, get your head above the parapet, look forward, and start planning for when you're an old bugger like me. So I hope it's been useful. I think it's a really important subject. I hope you found something from it. And as Adam says, feel free to reach out. You'll find Adam, puravidafp.com. Did you say, Adam?
That's the one.
puravidafp.com, or speak to usual contact at MAP, or find Adam through lots of other ways. I hope it's been useful, and we'll see you back in the MAP room again soon. Cheers. Bye for now.
Thanks, Stuart.